individuals crying. They paid more fees than tax, like, my firm, than Block3 Finance, got the wrong advice, got the wrong report, and now they're being penalized for $177,000. He's now saying, Mahad, I can't retire because I got screwed and it's not even my fault. I went to the right people, I got the wrong advice, now I'm paying the consequences of it. How is that fair?
Hey folks, Flo here with Blockchain North. Welcome to this new episode, or actually part one of a new two-part mini-series where we're going to be talking about taxation, crypto taxation more specifically. Topics like CRA enforcement, classifications, and most importantly for you, if you're listening here, the kind of mistakes that crypto holders don't know they're making or find out about too late. And by the way, this is highly valuable for Canadian crypto investors, but a lot of the topics that we're going to be talking about are at least theoretically applicable, in other parts of the world. So, tune in, you'll do your homework after this. But I'm going to be talking today with Mahad Mohamed, who I'm going to let introduce himself. But you might remember him from a mini series we did almost exactly a year ago. No coincidence, tax season is around the corner. But we're really going to talk about, some of the most dangerous questions or topics that really you need to know about. So buckle up. We've got a lot of questions to ask Mahad today, but this is probably one of the most valuable interviews you're going to have to watch this year. And again, stay tuned for part two as well. Mahad, great to have you back.
Hey, Flo, thank you for having me back. And yes, it's tax time. Just to introduce myself and my firm, Flo, for the audience, to the ones that already know me in the community. My name is Mahad. I'm in Canada. I've been an accountant in Canada for 25 years. Okay, just to give you a little bit of history timeline. I started my career as an accountant. English is my fifth language. I learned how to speak English, so I didn't have a choice. I studied math at Brock University. Ended up becoming an accountant for 25 years. I worked for Big Four, such as Ernst & Young. And then 7 years and 8 months I spent with the CRA as an auditor, as an appeals auditor as well, appeals officer. And then later on in 2014, I left government job in order for me to be able to run a business. And being in crypto from 2011, April 11, I was buying Bitcoin at $1.12. Okay, look where we've come. Started Block3 Finance. I started with 2 employees. And last year, when we spoke, Flo, I only had 31 employees. Today, I have 44 full-time employees. And I went from 2 to now 44. This is how much crypto has evolved. This is what crypto has done for so many people in the community. One of the things that we take pride at Block3 Finance is making sure that you stay compliant, that you get the proper crypto tax reports that you need. Our firm supports a lot of traders, investors, builders, high volume NFT traders. Pumped Up Fund last year was big. Polymarket was big last year. Stakers, NFT miners, cross-border issues. Having a second citizenship, dual citizenship in Malta or UAE and those countries, those are some of the things that we specialize. And I'm so happy to be here, Flo. I'm so happy to be sharing some of the knowledge that we have. There's been a lot of changes from a regulatory standpoint. I always say 1 hour in crypto is huge. 1 year in government regulatory of trying to understand crypto is even bigger. And there's been so many changes, and I'm so happy to be sharing this with you and with the community today.
Well, thank you thank you for being with us today. So let's start with a very basic question. What does the CRA actually consider a taxable event?
Right. And this is very simple. CRA sees so many different things. A taxable event is not somebody who's just buying and DCAing. Everything else triggers a taxable event. When you move from one coin to another coin, it's a taxable event. When you're staking, it's a taxable event. When you sell, change it to fiat, it's a taxable event. Canadian dollars to USD dollars is a taxable event. As I said, this is why you need to make sure that you're working with somebody who's a good accountant to be able to help you mitigate all these things. So it's important to have Remember, institutions doesn't do it for you in terms of defining what's a taxable event. The full obligation sits with a taxpayer, which is you, and CRA expects you to calculate it and do your own ACB, which is your adjusted cost based on the gains. And then in the absence of trying to understand what is a deemed disposition, what's a swap, when you use your crypto to pay for things, it's also considered a taxable event. So there's so many things, Flo, that is not defined or that is defined vaguely in the Income Tax Act. This is why Block3 has been busy trying to educate the market and making sure that the community fully understands what is taxable
So
event.
to dumb it down just a little bit, basically almost everything is a taxable event. I mean, right?
Except for holders, yes,
except
exactly.
for holders or for hodling. Okay, that's good to know. So
Yeah.
how does the government actually expect Canadians to report this? I feel like some people might expect to receive T slips, which they don't. How is that managed?
Yeah, good question. All the centralized exchanges, the non-centralized exchanges, let's just take even Wealth Simple in Canada. They recently started introducing a tax slips, but it's not accurate. They're classifying, they're not even calculating the ACB properly, and they're not even doing the sale properly. So you still need to have a crypto tax report. Again, I just said a moment ago, the full obligation sits with the taxpayer. There is no institution that does it for you. And from a regulatory standpoint, from CRA and Revenue Quebec, they expect you to calculate all the purchases and all the gains. And then in the absence of tax, that doesn't mean that there is an absence of obligation. The more people, then they rely on tax softwares, and tax softwares doesn't even identify if you're an investor or if you're a trader that should be reported a business. So this is what CRA has been going through, and in terms of data sharing agreement with major Canadian exchanges, because they see the deposits and the withdrawal patterns. So if you had never filed, the on-chain analysis tools is something that we use in terms of tracing wallet-to-wallet movement. But CRA recently has developed a lot of tools to be able to catch individuals that are not, properly reporting, and AI has made it easier for them in terms of making sure that they catch those individuals that are not reporting all the income. And Revenue Quebec stepped up one level by now using and hiring crypto on-chain experts to be able to track all the movements within from one wallet to one wallet.
Very interesting. And speaking of wallets, we have about seven, I believe, like regulated exchanges in Canada. Most of them Canadian, a couple of them foreign. How much does the CRA actually know about what's happening on those platforms?
CRA knows a lot, and one thing that we haven't started talking about, which has been under the carpet, is CARF. CARF is regulatory reporting between all the intercompany, all the intergovernments in terms of sharing of data. Now, yes, there are seven, but a lot of users are not within the confine of those seven. If you want to buy Ondo, you have to go outside to another exchange and then outside to another exchange. Pump That Fund is another one that people participate, a lot of Canadians. So there is a lot of risk onto the user, but CRA will go all out and all out in terms of making sure that they catch every single user who's not reporting. Now, the other thing to it is that even though those seven are regulated in Canada, they still don't take care of you as a from a tax standpoint. So everything is an investor, right? Remember, investor reports capital gain, which is only 50% taxable flow. And then traders should report it as a business income, and 100% of it is taxable. So CRA decides based on the behavior of a person, not the intention. So if you were just changing Ethereum to Canadian dollars every day, you're a trader, because every day that's 365 transactions, and that is a big risk for you and for your tax report. So yes, they're only regulated to exchange and for you to buy, but we haven't gotten to the stage where they should be doing tax reports and issuing of tax slips all those things as of yet. This is why it's heavily relied on you going to a proper accountant and not trusting people that don't have a lot of experience, or doing it yourself, or trusting Coinly. Coinly is one of the nightmares that CRA has been denying. All the Coinly reports, and Revenue
Oh, wow.
Quebec has been denying over the last 2-3 years.
Wow, super useful. Before we talk about classification, you've seen hundreds of Canadian crypto files, and I'm sure some international ones too. What's the single most expensive sort of situation that you've personally seen regarding crypto taxes?
Right. So without divulging people's names or such, I can only give you cases. Over the last 12 months, I and Kevin and Celia and Rui have addressed 7,280 audits related to crypto.
Okay.
Okay. Whether it's CRA, or whether it's IRS, or whether it's Revenue Quebec, those three. And in December, Revenue Quebec sent a lot of audit letters for, the initial stages was questionnaire. Now they've ramped up the audit exposure. Now, CRA is also doing a lot of audits for T1135, which is foreign property. So even though those 7 are in Canada, CRA is now exercising and saying, oh, you have some stuff with Mexi. That is foreign property. Mexi is in Seychelles. Why haven't you reported the foreign tax reporting? Here is $2,500 penalty. So there is dashing out penalties, and enforcement has ramped up for individuals. So some of the things that I've seen over the last 12 months has been, wow, I can't believe that CRA has this now. I can't believe CRA has these now, because these are some of the things that I was talking about a year ago. Now CRA has implemented, and now they're catching more people. And as I said, our practice has grown from 31 employees to now 44 employees full time.
In one
And
year. Yeah.
in 1 year. And they're all 100% of them, they're all doing crypto tax reporting, and corporations, personal taxes, Revenue Quebec, IRS, all the things that we were doing a year ago. Now we're doing the same, but we just expanded. And 17.8% of Canadian population use crypto as well.
Oh,
That's one thing
interesting.
that I've seen over the years.
Okay, that's an interesting statistic, and probably more up to date than most others out there. So very
That's
useful.
right.
Um,
Mhm.
how does the CRA decide if you're an investor or a trader?
So one of the things that people need to understand is analyzing the transactions, right? There's a rule of law, then there is spirit of law, right? So there are two different things. There are people that have participated in exchanges which they've gone down, like Celsius and FTX
Voyager.
and Quadriga, Voyager, you name it. They go under the spirit of law. The rule of law says if you're just buying and you make a minimum transaction or a maximum of 10 to 15 trades and sales per year, I'm okay with you being an investor. But if you are swapping, if you are staking, if you are building, if you are, anything, leverage, NFTs, all this is that you're a day trader. Okay.
What
So
if you swap a couple of times a year?
more than 15 transactions.
Okay.
CRA has an argument to say that you're a day trader. Now, remember when XRP was going through all these scrutiny with the SEC? What law were they using? They were using the Howey test. The Howey test is from 1948. Okay? So CRA, remember, this is SEC, the Securities Exchange Commission. CRA is still using what you could have done in your direct brokerage account, and they're using the same laws and they're applying to crypto. Okay? And because they're applying to crypto, guess what? Everybody in crypto, 90% of them should be a business. And this is what CRA is doing these days. Okay. So back in 2011, there was no regulation the CRA has published. They only published like 2 paragraphs of that Bitcoin is a commodity. But think about it. Back then, it was only Bitcoin. Now there's NFTs, there's builders, there's all kinds of things, miners. And now the rules have been evolved, and the rules is so much complex for an average person to understand. And this is why I would say that 91% of accountants, 95% of the accountants, they don't want to do those crypto tax reports because they don't understand it. And it's like you coming to me and saying, Mahad, how do you define this? And it's case by case basis. If you are doing more than 15 transactions per year, then definitely I would have to look at the cases and say, Flo, maybe you are a business, and this is what we need to do in order for you to be carrying a business. We need to incorporate, sell all your assets under Section 85 to the corporation and let the corporation do all the trades, because then you can take advantage of the small business deduction. And that means that the first $500,000 flow net income, the first $500,000
It's
is
no
only
tax.
12.2%.
Yeah.
12.2%, as opposed to you being taxed at 47 to 53%, which is a big tax bill at the end of the day. And now that we're in a bear market, all the people that have all these gains are now saying, Mahad, where am I going to get the money from? Because now we're in a bear market. So those are situations where everybody needs to be careful and understand the investor mindset and a business trader mindset.
And okay, so people can be reclassified. I think that's pretty obvious. Maybe speak to that briefly, but otherwise, what are the kind of patterns that make the CRA treat someone as a business rather than an investor?
Right, good question. The high transaction, frequency across like short holding periods, right? So let's say, for example, you buy Ethereum today and then you sell it tonight, or that you wait, 3 weeks, right? So CRA assesses that. The consistent repositioning between assets, like, swappings. Somebody who has multiple exchange accounts with active movement, or like, why do you have multiple exchanges if you are an investor? Right? Explain that. So those are some of the questions that CRA would ask you. And then what's even well versed now, CRA has become more educated. CRA reconstructs the pattern, so they don't ask what your strategy was, because they already know what the strategy was. If somebody has multiple exchange accounts and they're buying different things, Ethereum on different wallets, then that means, okay, well, why do you have a MasterCard, the crypto.com? Why do you have this? But CRA's mindset has already been constructed to treat you like a business as opposed to an investor. An investor is like Michael Saylor. All he does is buy, hold, buy, hold, buy, hold. He doesn't do staking. He doesn't swap. He doesn't do this. So those are some of the questions that CRA is now asking. And they've gotten good at it. And what used to be 3 pages is now 17 pages of questionnaire, because this is an opportunity for them to be able to assess.
Very, very useful. And so there is, of course, also a provincial layer. We've been talking about the CRA, which is a federal institution, but for folks who live, for example, in Quebec, as you mentioned earlier, in Ontario, in Alberta, in BC, I mean, anywhere in Canada, are there then different levels, let's say, of obligations, of reporting that is needed, or is that all centralized via the CRA? I feel like it's the
Right.
latter or the
Good.
former.
I'm happy that we're talking about this subject, because everyone focuses on a federal tax return. But keep in mind that if you reside in Quebec, Quebec has their own rules and laws. So a clean federal tax return does not mean that you're exempt from the provincial obligations. There are provincial obligations that you must meet. Okay. So the provincial penalties can stack on top of the federal penalties independently. So it's important to understand the province or the territory that you reside. What are the obligations, and what is required from you from a crypto related information filings as needed? So by you doing it yourself, or going to an accountant who doesn't understand, that is relying on you to do Coinly. Let's talk about Coinly. They don't even understand the federal and the provincial. They just give you one report, right? And how do you know that is accurate? So this is why it's important for you as an individual who resides in a provincial with different regulations than the federal. We don't want you to miss this significant critical step. So the provincial tax rates vary between province to province, territory to territory. And the province that you live on December 31st determines your rate, your marginal tax rate. And moving from one province mid-year to another, it also creates crypto dispositions in terms of complexity, because if you're living in Ontario and you move to Quebec, now I have to assess how many days you were in Ontario, this rules apply. And how many days do you live in Quebec, and this rule applies, because you have all these crypto transactions, and that's what moves the needle. So by you being reactive, there are penalties for it. And this is what CRA and Revenue Quebec has been fighting over. No, I get to charge the 1135. No, I get to do that. Okay, both of you get to do that, right? So this is some of the things that they've been doing over the last 12 to 18 months.
Yeah, and that's interesting because it means that you have basically two tax men, to put it this way. I don't know if I can say this in 2026, chasing you simultaneously and almost competing for, not for your attention, but for your yeah, for your reporting, basically.
Right, right. And I had situations float where individuals crying, not because their intent was wrong, but it's because they went to the wrong accountant and obtained the incorrect advice. And as a result, they have to now refinance their house in order
Wow.
to pay both Revenue Quebec and CRA, right? So did I want that for them? No. Were they advised wrong? Yes. Did they trust the wrong resources? Yes. And when I tried to get to the bottom of it, an educated accountant, only giving them a crypto report because that's what the accountant asked for. And then for them, paying for a service, they paid more fees than tax, like, my firm, than Block3 Finance, got the wrong advice, got the wrong report, and now they're being penalized for $177,000.
Wow.
And where are they going to get that for an average person that's producing $70,000 of a T4 income? And he's getting ready to retire, one of them, and he's now saying, Mahad, I can't retire because I got screwed, and it's not even my fault. I went to the right people, I got the wrong advice, now I'm paying the consequences of it. How is that fair to an individual, just because the rules and regulations are written for a lawyer type, but not for the average masses? And this is what Block3 Finance has been doing since 2011, to make sure that we produce proper education for everyone to take
Yeah.
advantage of.
And of
Mhm.
course, this partnership between Block3 Finance and Blockchain North is a big part of that. Folks, if you're well, I just wanted to set a bit of context and remind you that this is a mini series, like I just said, in partnership with Block3 Finance. We're talking with Mahad Mohamed, who, as he just said, has 25 years of experience in the space. Last time we did a video together, and we also had him on Spaces. People were just very, very, I think, receptive to this kind of information, and especially at this time of the year, March 2nd. So, and also make sure to subscribe and make sure to hit the notification bell, because there's a part 2 that'll come out a week after this video. So you'd want to see both. We made sure that it's packed with useful information.
Yeah, you don't want to
So
miss it.
you don't want to miss it, absolutely. And like you just said, I mean, it's risky, right? Basically, missing it can be a risk. So, so the adjusted cost base. This is something that sounds so straightforward, but apparently causes a lot of problem for crypto holders. Why is that?
it the thing is, it's not what when you bought, and how is it treated, like the normal stock, the legacy, the direct brokerage account. Every purchase, every swap, every fee, and on-chain interactions affects the ACB. Okay, I'm going to repeat. Every purchase, every swap, every fee, every on-chain interactions affects the ACB. The ACB always changes. It's not the same.
Okay.
So unlike stocks, there's no institution that tracks for you. Errors in the ACB just doesn't affect 1 year. It cascades it into every future sale. Okay. So what CRA and Revenue Quebec and the IRS, they say on a calendar year, January 1st to December 31st, what was your opening balance? What was your opening ACB? And then on December 31st in that year, what is the ACB? Because there's going to be all these swaps, all these fees, all these on-chain interactions, which changes the ACB every single year. So this, like the superficial losses and the Canadian crypto holders, If you sell at a loss and repurchase the same asset within 30 days, the loss is also denied. So everything affects the ACB. And it's important for people to understand that nothing is straightforward in crypto. Like nothing. When I say nothing, it's nothing. And it's important for you to be able to outsource and hire a professional to do this crypto tax report, because that's the only thing that you have, and that you can make a reference to, because an exchange can go bankrupt, on-chain can go shut down, and we've seen so many of them through our history flow over the last 10, 15 years.
Thanks. Okay, that's great. Let's switch gears a little bit and talk about maybe a little bit of drama. Let's talk about hacks and losses and damage claims. I mean, of course, sorry for anyone to who it happens. I don't wish that upon anyone. But for example, if someone lost crypto in a hack, and we've seen a lot of those, even though maybe a bit less so recently, you could tell us that. But there are obviously still rug pulls, and we've seen exchanges collapse in the past. If you've lost your crypto, your tokens, your assets through one of these catastrophes, there's no other word. Can you claim a loss?
The Every single person, including myself, who has been in crypto, has experienced at least a hack, a rug pull, or exchange collapse, or that you sent your coins to somewhere and then poof, it's gone. You trusted someone. So CRA's interpretation is that on a legacy world, on brokerage account, when a penny stock goes to zero, you get a report, right? It's confirmed. The institution is supposed to send it to you. But not everything that someone says is believable to the eyes of the CRA. And CRA has, again, the rule of law. The rule of law needs to apply in every situation where the person is saying hack losses, rug pulls,
Mm-hmm.
in order for you to be able to claim those damages, right? So the CRA doesn't automatically accept a loss, but just because it went to zero. You need to demonstrate that a disposition or that the asset is truly unrecoverable. So what do I mean by that?
Yeah.
Documentation is everything. Okay, documentation is everything. Show me a proof that you sent or that you bought 5 Ethereum and that exchange collapsed. The transaction hash, the text IDs, the wallet proof, the project records. So sometimes we participate in builders. Some builders would send their engineers 10 Ethereum, and then those 10 Ethereums, those engineers take off. You need to show me that the transaction hash, the wallet proof, the project records, all the documentation. How do you classify and report the losses in order for CRA to accept it is by reporting it to the police, getting a police report number, and then also reporting it to the Canadian anti-fraud, and getting a federal. And even that, CRA will question it and say, Flo, did you try to get it back? Did you do everything that you can in order for you to be able to get back those 10 Ethereum? Or were you just negligent? Right? So again, it comes down to having a good accountant who understands crypto, such as Block3 Finance, and we will go to the extra mile in order for you to be able to deem those things that you've sent as a loss. And we have the strategy and the tools for that, because we've written to so many times the CRA rulings department, and CRA rulings department have came back to us and said, these are what's acceptable in terms of determining those losses. Documentation is everything. So you need to have proper records.
I have to ask this question, which I hadn't planned to ask, but my curiosity is piqued right now. I get the feeling that the system isn't really there to make it easy, basically, for Canadians. I mean, and I understand that, the law is the law, and I understand that crypto is new, and, I understand that, of course, there's a lot of people trying to finagle the system, and so, the rules are very defensive, and I also understand that taxes are, Canadian citizens' assets, basically, like in any country. So it's also our collective, resource. But yeah, I mean, is Canada unnecessarily complicated?
Not as complicated as the US and the IRS,
Oh,
but
really? Okay.
IRS is a lot more complicated if you're a crypto
Wow.
holder. Okay. Um, in Canada is a lot more lenient because they apply the spirit of law. So let's say, for example, you participated in Celsius and Celsius went down, but you don't have all the track record, like all the documents.
Yeah.
Or even Binance.com, you're not allowed to use it anymore, but you cannot get into your account. So CRA, from looking at the transaction hash ID, now they're asking for emails. So CRA is actually being more lenient than Revenue Quebec, than the IRS. Okay.
Okay.
So the IRS has one way, and you can only go by that one way. Okay. Revenue Quebec has one way, they only went by that one way. But with CRA, with our federal government, if I'm sitting across from an auditor, which I have been so many times this year and last year, is that you're able to explain the history and how it evolved, like what actually happened. They will listen to you and then keep asking questions. So it's more so
Yeah.
like ask more questions, talk, make less statement for them to be able to analyze. And this is how they've been able to advance their AI and advance their motives in terms of catching unreportable income and people that are not showing the documents that are required in order to deem
Mm.
it as loss.
And so, okay, so in terms of catching people, what are some of the most common triggers that lead the CRA to audit someone?
So CRA doesn't just always say, Flo, I'm going to audit you today, right?
Never happened to me,
CRA,
not yet.
well, I hope not. I hope that never happens. But CRA doesn't always come to an individual and say, hey, I'm going to audit you today. What CRA does is that they always start with a request for information of all the exchange records and the wallet addresses. They would ask you for that. If you have a Block3 crypto report, you would also send that. And then they will call us. But if you don't use Block3 Finance, what they will do is that they will make a cross-reference with what you reported versus what you already have. Okay? But if you can't produce records, CRA then will deem it as the purchases as zero ACB, zero cost base, meaning that 100% of the proceeds will be taxable to you. So the process is slow, is stressful, expensive, especially for somebody who's not prepared. So like what triggers and leads CRA to individual is like, high value bank deposits without matching reported income, capital losses without supporting, the proper documentations to substantiate those losses,
Yeah.
data mismatches between exchange records and filed returns. And then basically then it leads to connection of flagged exchanges, projects, and wallet, clusters. To give you a good example, Hex, Richard Hart's coin, because it's not on, Coin Market Cap or CoinGecko, it's kind of hard for you to be able to have your ACB. This is something that we have to do manual because, certain coins are not on Coin Market Cap, and it creates more complexity, which is why documentation is important if you want to
Mm.
be away from triggers of audits.
So we don't wish anybody to be audited. You said it yourself, but it does happen. And if it happens, what does it look like? Like if I were audited tomorrow, me or my business, or is it, by the way, both? Like do they knock on your door? I imagine they don't, but
They will always start with one by sending them, a questionnaire. With the questionnaire, it would divulge that you have a partner, and then the partner would also get a questionnaire. Okay, and
when you
you're
say a
both
partner, you mean a
reporting.
personal partner in your life, like
Yes,
a
a
wife
partner in
or a
your
husband.
life or a business partner or
Ah,
whatever
okay.
the case might be. Friend, brother, sister, your cat, it doesn't matter. So what CRA would do is send you a questionnaire. They would say, hey, Jeff, answer all these questions. Then Jeff says, Sophia, who's my sister, and we trade. I gave her money. Then all of a sudden, they would say Sophia's name, address, SIN, birthday, and then Sophia will also get the same letter. And then they will match the information to. But when they do initial questionnaire, then they will send the audit letters to both. And then when they send the audit letters, then it's better to comply. CRA gives you 30 days, Revenue Quebec gives you 30 days. You have 30 days to compile all that information and submit it. But if you had Block3 Finance, we would do all that work because you've already paid us to do all that work. And when we're doing that work, it's for free of charge because you already paid us to do the work. Why are you paying again for us to address the same
Hmm.
thing? That's
Okay.
that's that's our notion. So this is where it takes a long time, and that you get into this stressful mood, and and they want to know every single thing between the deposits to your bank versus what you reported on your tax return, and anything more than $10,000, the bank has a fiduciary duty to report it to the government. And this is one of the things that CRA has also been catching, but they don't tell you that they have access to that information. But they're watching. Uncle Sam is always watching.
Yeah, yeah, the Canadian version of Uncle Sam. Yeah, I have to say this interview is somewhat anxiety inducing. Like even just listening to everything you're saying, I'm like, God, did I do this? Did I do that? Do I need to? Okay, so I guess I need
as
to
much as
contact
as
you.
much as possible, I don't want to scare you or our community,
Yeah, but
but
it's a warning.
I
I mean,
have I have I have a duty to be able to share with what's happening in this side of the industry, for you to do the things that you're supposed to do the right way.
yeah,
Because once you get into the wrong shoes, it's hard to come out of that problem. And CRA and Revenue Quebec and IRS are not the nicest people that you want to deal with,
no, for
and
sure.
this is why we exist.
Yeah, and one thing that people might forget as well is that accountants are actually themselves very regulated, right? So it's like you have, like you said, a duty to, support and inform. Not everybody does, but you do have, right? That's true, right? That you guys are very regulated.
Yeah, yeah. It's I have a fiduciary duty to support and do the right thing and enhance my education. Not everybody is a fan of crypto, in terms of accountants, and I would say that 95% of them they don't like, but the 5% that do like, we have a reason, because it has done something for us. Look at what crypto has done for me. It has scaled my firm from 2 employees to now 44 employees, and is providing all my employees with the basic living necessities of life plus more. Right. So it's important for me to be able to stay on top of what's happening in the world, what's happening in the news, in order for me to be able to do things right for our clients. And that's very important to me. This is what my fulfilling purpose of life is, in order for me to get in the car today to come to work, knowing that I'm sharing this information for you in order to make sure that you make the right decisions for you and for your family, not only today, but for generational, because you might not be around tomorrow, but your family and your legacy will survive. And I don't
Yeah.
want everything to go to zero. That's my
Right.
purpose.
That also means that if you're watching this video right now, watch it. It's great. Rewatch it. Maybe you could, do things like copy the transcript of this interview and, keep it for your record somewhere because it's highly valuable information. But also share it, right? I mean, sharing is caring. So if you know of your brother, your uncle, your cousin, your colleague, and you suspect that they could benefit from this information, and probably most people can, yeah, share it with them. So
Mm.
Mahad, a couple of questions to wrap up. So basically, if someone knows or senses that they might have not been fully compliant, perhaps they've even finagled the system a little bit, is there anything that you can do sort of now that you know before you get audited?
Yeah, and again, I'm talking to you. I'm talking to you as the community. Don't wait for the CRA to contact you. Okay, that's very, very important. When CRA doesn't contact you, you have a lot of options: voluntary disclosure, taxpayer relief, doing adjustments. Proactive corrections is always cheaper. Gather all the every exchange record, wallet addresses, the transaction history that's available to you. Access, whether the prior returns need to be amended, the voluntary disclosures is warranted. The longer you wait, the more interest that you incur, the fewer options that is available to you. And my message to you is very simple. If this is the first year that you're reporting real gains, or you're getting the foundation right, from day one, it's better to partner with a good accountant so we can create the structure and the classifications, so that way that you don't have to pay the price later on. So this is the moment where you pay for a proper advice, and then later on it pays itself many times over and over and over again. And what I like to say is always, it's not what you make, it's what you keep. And it's very important for me to be able to help you. And again, I always talk about life is not about you, it's about, you know, your legacy and the generation after you, right? If you look at the Rockefeller, you know, he has done all the right things, so his great 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 grandchildren know who good old Uncle Charlie is. That's very important in crypto. This is what I always say, that life is not always about you. It's about, you know, the things that you leave behind for the next generation. And crypto has done that for so many people. And it's important for you to be able to get it right on day one and not pay the price, or your family doesn't pay the price later on in life. Right?
Maybe just one last question I want to ask you. What does it cost? Like, I mean, what is a sort of a ballpark? Because I imagine a lot of people, me included, maybe thinking like, you know, okay, sure, I'll do it, but maybe right now is, you know, it's we're in a bear market, or, you know, I have a lot of other expenses, you know, in my life right now. I'll do it later. You know, it's always like that, later. You know,
Yeah.
what is, I mean, for a regular individual, let's say, you know, a private individual that has, you know, I don't know, between 10,000 and $100,000 in crypto, which is probably the majority.
Right.
You know, like hiring you for, you know, to just kind of review the situation. Is that, are we talking about a significant investment, or is it quite
So,
accessible actually?
no, good question. To review a tax return is free, $0. Okay,
Okay.
$0. Okay. Um, the way we charge is by transaction. So for every 100 transactions that you have, you pay $150.
Oh, okay.
So, so you can look at how many transactions. We're so transparent. You can look at how many transactions, divide it, calculate the fee that you will pay me. Okay, it doesn't change. To do your personal tax return, we start at $200.
Okay.
Okay, so if you are, let's say, a holder, and you just need the crypto tax report, and you have 100 transactions, you're going to pay me, you're going to pay Block3 about to $350 to do your personal tax return. We're
Sounds like
very,
money well spent. I mean, yeah, that's like
right.
a nice meal for two people in downtown Toronto, right?
Right. So this is what we've been able to create, to help more people, because we're there for the big builders, we're there for the little guys, and we're there to help you get to, you know, elevate as well. One of the clients that we have, you know, has about 12 transactions to 25 transactions per year flow,
Okay.
and he has 26 Bitcoins,
Okay.
and he pays us $400 to do his tax return. So we don't look at what your net worth is. We look at what we're asked to do, and that is very important for us, because we don't judge if you're rich or poor. Is our price is our price, and that's what we go by.
Great. Thank you for answering that. A lot of people maybe wouldn't just answer something like this
And
on
and the
camera.
best part about it, Flo, sorry to cut you off. The best part
No, no.
about it is that we offer a free consultation.
I was just gonna
So
cue it up.
and we get and you get a free 30-minute consultation of my time. Okay, I've seen governments print money, but I've never met anybody that prints time. Okay, I've never met anybody. Maybe you can tell me, but this is us at Block3 investing in you, in a relationship, so that way that we can continue building together, as opposed to just like, oh, pay me this now, pay me this now, pay me that. Like, we don't do that. And this is why we have a mass of good clients that are really happy with the service that we do. And we invest in the community, mainly for the proper education. And if you go to our website, every single day we publish 2 articles in the crypto arena that talks about different subjects within crypto. All that for you, and you know, to build the education that is necessary.
Thank you, sir. One of my last questions was also, where can people maybe follow you or find your content?
Yeah, so you can go to our website, www.block3finance.com. We have 3 offices. One is in Canada, the other one is in UAE, and the third one is in Singapore. Uh, Depending on the jurisdictions that you leave, we have one email for all 3 places. It's inquiry@block3finance.com. And you're more than welcome to email us and use the coupon code that says Blockchain North. and we'll be able to give you 30 minutes of free consultation, and you can share all your information in confidence, and we can create a strategy for you.
Amazing. And we'll share all these details, of course, below this video. Mahad, thank you so much. Thank you. And to Block3 Finance for this partnership. Folks, this was our interview with Mahad Mohamed, 25 years of experience, especially in Canadian tax accounting. So a wealth of information, as you just heard. If you maybe just caught the end bit, make sure to rewind because there's a lot of content in this interview. Stay tuned for part 2 that'll come out just about a week after this video. Be safe, and I'd say be compliant, folks.
Yeah.
All right.
Yeah. Thank you so much, Flo, and thank you to the crypto community for always supporting us and making sure that we help you as much as we can.